Hello, and my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. The first one I'd like to look at is the euro against the dollar. Now, if we look at this chart, we can see a reactionary bullish white Mariposa yesterday, taking prices up over both the middle time of the 2021 bearish Andrews pitchfork, currently 119.04, and the very recent 50% Fibonacci line at 119.75, and closing over both. It was all seemingly done from the midst of the seemingly light, lesser Fibonacci congestion at 118.97 and 118.87. However, I suspect the rising proximity of the long moving average below, currently at 118.55, had a significant hand in doing all this. Nevertheless, we still have target X below in the 118.05 area. This is the target for the action over 2021 so far, being a sort of halfway hesitation. I've recently been minded to think that the market came so close to it last week that you might call it reached. However, it does not preclude further attempts to fully capture it. So far today, a significant move back down through the 50% Fibonacci line, though not as far as the middle time as yet. The next chart to look at is cable. A bullish white soldier yesterday and a suitable follow-on to the previous session's bull hammer action. The market's rise slowed and halted upon approach to the supremely important middle time, currently 139.94 of the late June to late September 2020 bullish shift pitchfork. This middle time, along with the lower time below, currently 135.35, have given the bullish angle of attack of this market since September last year. Below, we still have the rising short-medium moving average, currently at 137.95, and its partner, the start of November 2020 to date uptrend, currently 137.72. So far today, a further attempt higher to the middle time, touching it briefly but retreating back now to look very much like an indecisive doji cross at this time. Not really surprising, I suppose, to have indecision at these levels. The next chart to look at is the euro against sterling. A new low yesterday, one not seen since February 2020, but also a long-legged indecisive spinning top, perhaps a new pattern as well. All this is still about how the market approaches the two targets below, target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area. That's the target for the recent sideways triangle. Now, the new pattern idea that may be forming since the end of February is a possible descending triangle. The upper trend line for the triangle is the late February to date downtrend, currently at 86.27, whilst the base is made up from the lows in the 85.5 area. So far today, a move back down to the base of the descending triangle and looking like a bearish engulfing pattern right now. It all depends if closes can happen below that 85.5 area. The next chart to look at is the US dollar against the Indian rupee. A second consecutive indecisive pattern yesterday, a higher but still indecisive spinning top. The market is still seemingly contemplating its exit from the recent proposed descending triangle and wondering if it will be a false break lower or the real thing. The top is still capped by the 50% Fibonacci line, the July 2019 to April 2020 move at 72.64. Meanwhile, below, with the September 2019 high at 72.41 plus reappraised uptrends from 2018 and 2020 helped support the market. Overall, we have the overhead declining partnership of the middle time, currently at 72.80 of the early November 2020 to late January 2021 bearish Andrews pitchfork, and the short medium moving average, currently 72.92, joined now by the flatlining short moving average, currently 72.85. Below we have a mess of support between 72.41 to 72.05 until we reach the descending lower time, currently 71.88. Finally, we still have a preliminary target X on the downside in the 72.05 area for the descending triangle. It lines up with the February 2020 high, and a full optimal target X1 would be in the 71.20 area. So far today, a gapping lower open below the September 2019 high at 72.41, but a rapid move back towards yesterday's open and close. We still have the 50% Fibonacci line overhead. The next chart to look at is the US dollar against the Brazilian real. A bearish black crow yesterday, and a counter to the recent key reversal up. Further down, we still have the support of the lesser 38.2% Fibonacci line, the May to June 2020 move at 552.90. This lesser Fibonacci level was interesting because it provided the flat trend line necessary for the recent bullish ascending triangle. Overhead, we have the 50% Fibonacci line at 570.10 for the last week's move. Now, one final point, the action from last week till now is suspiciously starting to look like a bear flag pattern. Just keep an eye open on there. So in the meantime, good trading and stay safe in the markets and in real life.